Hello, Mr. Chandrasekhar. We'll be starting the webinar in another 2 minutes since we will be starting the webinar at exactly at 4 o'clock. So, am I audible, audience? Thank you, Chandrasekhar. Thank you, Mr. Sheshnath. I haven't started webinar yet. We'll be starting in another 2 minutes. Welcome all for today's webinar. Welcome, Mr. Kaushal. Welcome, Mr. Sheshnath. Welcome, Mr. Ted Hogan, Vijay Kumar. Thank you for joining today's webinar. I hope I'm audible. Please confirm with yes or no in the chat box, audience. Yes, Chandrasekhar. Recordings will be shared to the all the attendees. Okay, Chandrasekhar. I think your ID may have missed. You can directly mail to my email ID so that I'll personally share with you. You can also find all our webinar recordings under our YouTube channel with the name of WebSol. We have been doing these webinars from last 3 to 4 years. You can find all the webinars related to GST. This is the complete knowledge base that you can say related to GST and all the indirect taxes. So you can find recordings in our YouTube channel as well. So whenever you feel to learn more about GST, you can find we have almost covered all the concepts related to GST through our webinars. So you can find in the YouTube. Sure, Sheshna. I'll share the entire playlist. I have gathered all the webinar recordings under one playlist. I'll share with you the today's webinar and the playlist I'll share with you. So while we are waiting, audience, I'd like to know majority of the audience are from which background and what are their designations. Can you put it in the chat box? Type your designation and your industry that you are coming from in the chat box. We have a little time to introduce ourselves, so you can put in the chat box about which background and which designation that you are representing. Our speaker is already waiting for us in the backstage. So he has joined. So after a little introduction, we can start the webinar. Okay, we have CFO from IT services company. Welcome to the webinar, Mr. Kaushal. Okay, we have branch accountant. We have most of the IT sector finance professionals. Good to know that. As we also know, sir, the speaker is also having good amount of IT experience in finance. Okay, we have students also from MBA Finance. It's a good way to learn, actually. Also, audience, I want to know, since the topic today is building zero risk GST compliance framework for enterprises, I would like to know what is the expectations from your end. So you can mention in the chat box that what are you expecting from the today's webinar, and if you want to suggest any other queries, you can put it in the chat box. If you want to cover any different topics related to, if different vertical topics related to this. So what are you, other than our agenda points, what are you expecting more from the today's webinar agenda? Biggest challenge we face is GST refund for our export business. We are 100% export company. Okay. Let's see, speaker can be able to answer this. We have a dedicated Q&A session, audience, at the end of the webinar. So if you have any theoretical questions or if you want to directly ask with the speaker, you can do that as well. So you need to stay till end so that we will enable your mic so you can directly speak with sir. Okay, budget related coverage. I think we have covered it in our last webinar, Chandrasekhar. I will share you the webinar recording. This time, budget is not more discussed about indirect taxes. It's more of a different agenda. So there won't be much coverings related to indirect and GST coverages. But also we have discussed what are the limitations and other things in our last webinar. I will share you the link. Obviously, Prince Gupta, this is valuable for freshers. Uh, Although the topic is more of a CFO level topic, you can always relate it to your core concepts. Okay, let me check my headphones once. Audience, can you confirm my voice is clear? Okay, there is no echo or anything, right? Okay, then it's perfectly fine. Good evening, everyone. My name is Pawan Kumar Sahu. I handle product marketing at Websol, which represents the product called Flotax, which is GST management platform. So I represent from the company called Websol. Websol is a part of Wipro back in days, and we are a printer manufacturing division from Wipro. We have been separated from Wipro and we have started as a domestic IT businesses. And we have been evolved from since 2 decades till now. We have expanded our product and service portfolios and now catering to larger mass audiences. So over the years, we have also collaborated with market giants like Ricoh and Fujifilm. I would like to highlight a small journey in our company that we have underwent complete brand transformation with the name of Websol. Now we are called as Websol. So moving on, these are some of the highlights from our company. We have over 25 plus years of experience and we have over 500 plus enterprise customers. Overall India, we have 22,000 plus service locations as well. You can see some of the promising awards that we have received. And these are the trusted clients we are catering for our MPS businesses. So these are our product portfolio, which we have, which we call as Fluid Works, which comes under an umbrella of all the IT services. You can find more of the products here. We have billing products as well. We have automation products, consumables. We have dedicated Flowtax, which is GST management platform and automation platform. You may aware GST API softwares. So this is one of that, but we have we say ourselves as we have a larger and faster capability to execute your GST workflows. So audience, I have launched a poll on your screens. We have a product called Flowtax, which is GST management platform. If you want to know more about how to automate your GST, you can click on yes on your poll box. So we will give complete demo for automation of your GST. So you can automate your GST and we will teach you how exactly you can do that. So as you all already know, GST consists of GST filing, reconciliation, e-invoice, e-way bill, IMS, tax automations. All these processes are more of a manual processes done by chartered accountants and other financial professionals. But you want to automate your entire GST process, you can click on yes, reach out to me on your demo poll so that my team will reach out to you and explain you how to automate your. They will give a complete demo for automation of GST. So the poll will be open for another 10 seconds audience. After that, we can proceed to our next topic. So basically, Flowtax is a GST management platform which can automate your GST ecosystem. Okay, Savan, if you have any queries, you can type in a chat box. If you have any question that you want to directly ask with the speaker, we have a dedicated Q&A session at the end of the webinar. So for now, you can type in chat box. I hope you are accessible to the chat box, right? So I'm ending the poll for now, guys. Moving on, let me introduce our speaker of the day, Mr. Srinivas Arya. Srinivas Arya is a finance leader for over 3 decades with Tata Group across sectors like engineering, auto components, chemicals, BPO, leather, etc. He has led major transitions such as GST, Ind AS implementation, financial consolidation, etc. He is a former group CFO at Pilani Organics as well. It's an absolute pleasure to have you here, sir.
Thank you. Thank you, Pawan.
Over to you, sir.
Good afternoon, everyone. Thanks for joining on time because time is precious end of the day. So without wasting much, I'll just proceed on today's topic. Next slide, please. Yeah. So why enterprises need a zero risk GST compliance framework? See, GST is not a new now because it is almost a decade now we are using this. Here, what happened is when the GST came, prior to that, we have VAT, sales tax, and all those things. And then once a consolidated the tax structure has come to India, the GST has become like more of a compliance requirement. Just filing the return or on time, or whether you put your returns on quarterly, monthly, or you submit your data with the department, looks like this is fine with us, and we are compliant. But of late, it is not a more of compliance requirement. It is more of a profitable and business risk also. Because what happened is in the GST, when we just may, as a CFOs or as a finance heads, you just want to comply. It is not no longer just a tax department issue. When there's a notice comes, we have to issue to the legal department. When we need to put input rate, we have to contact the procurement department. Like that, a lot of interdependencies are there. So I'll just keep on explaining on those things in subsequent stages. And also now, apart from that, even board is also interested in governance and risk matrix. How do we comply with the GST requirements and etc. Next slide, please. Yeah. See, as a global enterprise are uniquely exposed to complexity. What are those complexities? It is multiple registrations, shared services execution, high vendor volumes, intercompany and branch transactions, exports, imports and SEZ, and ERP complexities and process validation. Here, if we see this, why we get a global enterprises will get into GST purview. There are a lot of companies based in US, but now they are having a GCC centers in India. The business is doing in India, and they are exporting some services. They are providing services in domestic in India also. So where GST is coming into picture, since the volume of operations are bigger and many centers, many branches, they get registered at various states levels, and they deal with the number of vendors. Since they have many branches, a lot of intercompany transactions, the corporate office, head office will start moving it. And being an export, back-to-back export companies and products or services, they need to get registered with the GST department with to get the benefit of refund and other things. And to support all this, ERP. And ERP will definitely facilitate a certain extent, but it is having its own complexities. You need to listen to that instead of we say what we say, like SAPs, Oracles, and other things. They're very rigid in practicing the things. So we need to have a separate tools to get the data analytics and also to get the reconciliations done instead of depending on manual ones. Next, please. Yeah. So what is zero risk or zero tolerance? It is in compliance. Actually, there is no word called 90% are complied and 99% are complied. Either it's a 0% or 100%. So in case of risk also, if you find out, you have to maintain a zero tolerance level. Zero tolerance means you will not entertain any errors or any frauds in the department. So here what happened is the major part here, the zero risk, why we are talking in this connection is the company, when we file a return, there is a possibility of mismatch in the data. There's a possibility of not getting input credit properly, result into you have to pay more cash, and that result into working capital issue. And then if you get a bigger notice, if it is a listed company or something, the notice will come and then they have to disclose to SEBI and other regulatory bodies. Then the reputational risk will come. And board level, they have governance issues, because if the board is not comfortable with a lot of notices coming on, they suspect that something is not going correctly in the company. So to do all those things, to maintain a zero risk, what are the things we need to do? We have to have a proper controls, closure discipline, and continuous monitoring. Next, please. Yeah. So the zero risk framework comes with 5-point formula. One is governance and accountability, process controls, data and technology, vendor compliance, and assurance and monitoring. So here, if we talk it about the risk of governance accountability, we have a matrix called RS. It is called RSCI. Means you have to make it that framework in such a way that you have to identify person responsible, and you have to make that person is accountable, and also he should be consulted in case if he had any issues in resolving the problem, and also he has to inform to the higher authorities. If you follow that RACI cycle, then the accountability will be fixed. Once you fix the accountability, automatically that will cascade up to the next levels for the governance process, and you have to tighten up the processes. Once you process all your existing processes, for especially the vendor related processes where input credits are very important, it will give you a benefit to your cash flow. And take the support of data and technology, and then ensure your vendors are being filing your returns on time, your invoices on time to get your input credit. And assurance and monitoring. Assurance monitoring is, it comes at the broad level, where you have to, as a CFO or as a head of finance or as a head of the institution, you need to ensure to the board that all the compliances are in place and there will not be any problem, and you are monitoring that at frequent intervals. Next. Yeah, governance and accountability. If ownership is not defined, risk everyone problem, but nobody's responsibility. This even in general life case also, everybody, if you are not taking any ownership of any particular work, then nobody knows who is doing to do the job. Similar case, even in case of corporate life, in case of taxations and everywhere, somebody has to take the ownership of that activity. If ownership is not defined, GST risk becomes everyday's problem and nobody's responsibility. And here, what happened is the compliance charter. You need to identify the person, function, and the roles, responsibilities, and then that has to be given to audit committee, and audit committee will approve that, and then they review annually or quarterly based on the periodicity they meet, and then define the compliance philosophy and risk appetite. Here, the risk appetite means what happens is a company having, say, 20,000 crores company. If a 5 crores notice comes, they're not worried much. They can easily resolve it because they know what is issues they are having it. But a company having 50 crores turnover, having 10 crores notice, it's a big issue. And there's a huge risk in that. If in case if they failed in negotiating or if failed in explaining to the department or succeeding in the notice, then you have to pay with 10 crores cash. Then the company will have a lot of trouble and the reputation of that company will have a huge. So here in case of registration wise accountability, as I said, multiple registrations will have a multiple issues. So we need to have a owner against that every registration who is responsible for that particular region or branch, and who is going to file and who is going to answer the receive notices, answer notices. You have to identify the ownership very clearly. As I said, this RACI process, that is nothing but responsible, accountable, and consulted with it and informed. A procurement, suppose vendor onboarding and compliances, we have to identify the person and then give the accountability. And then finance, bookkeeping and reconciliations, tax, IT systems, and internal audit. All these functions, we need to identify RACA factors and then monitor it that closely. And come to escalation matrix. Mismatches beyond SLA escalates automatically. Notices escalates 24 to 48 hours. Unresolved issues reach out to CFO and audit. The escalation matrix depends on the organization and size of the organization. Suppose a proprietary driven company don't need to wait for audit committee and CFO and other things. The intimation should go within 24 hours. If it is because if it is larger companies, audit committee will never meet so frequently. So they need to inform to CFO and CFO in turn meet or share the data to audit committee members and then give the alarm to them, the intensity and the risk and the importance of that notice, and then call for a meeting. Next. Yeah. The governance hierarchy here is zero risk compliance. How do we achieve this? One is strategic oversight and policy. So here the cross-functional RACI, as we explained earlier, the procurement function, finance function, technology function, internal audit function, all these needs to be aligned and define roles, and then inform to the audit committee about the proper what the methodology of RACI we adopted, and then GST compliance charter we had to put it, where the central governing document defining the organization specific risk appetites, what type of risk you can accommodate, what type of risk up to what percentage you can do, and what type of escalations you have to define in the charter. And then if you have multiple GSTs, then you have to put the names against each GST owner, and then escalate that matrix to, as we explained in that, 24 hours, 48 hours, depends on the size of the company. And here, if we define ownership prevents GST risk and from becoming a nebulous to unmanaged liability. So once you put all these things, the advantage of this matrix and the advantage of putting this risk committees and other things is it's called a risk framework. Here you will have a important part is input credit, the biggest lever of your GST cash flow, and which can be controlled. And the ITC risk in the mismatch of risk credits. If invoice not reflected in GST to be credits may not be denied or delayed. And then second, the ITC risk is eligibility risk. Certain credits are blocked under the law, and companies often miss that. And especially the areas like employee-related expenses, certain capital items are mixed out to cost, and they think that they will get the input credit, but they will not get the credit. So these are the risks. These are the identify this as line items and then put it in their charter and share it to the person responsible in that. And third risk is there's the timing risk actually. This is very important. Credit must be claimed within the specified timelines. If delay cause, you will lose the credit. Once you lose the credit, you are losing the cash flow. Once you lose the cash flow, your working capital is increasing. Means your borrowings increases, interest cost increases. These are all vicious circle. It will keep on increasing on that. And the next level of the reversal risk. Suppose if you have got a credit, you're not received due to non-payment within 180 days. Exempt supplies or vendors, non-compliances, that also will have impact on your cash flows. Next, please. Yeah, process controls, as I explained, that procure to pay and then order to cash, record to report. So here what happened is the procure to pay is nothing but your vendor department, where you have purchase department is called vendor department, purchase department, the procurement department in some companies they call. They have access to the all the vendors who are the large scale vendors, medium scale vendors. They classify. Once they identify the vendors, then they will start sharing this process, person responsible, and all those things. They will keep sharing it, and then they have to keep following it with the vendor for filing the invoices on time to get the benefit of your input credits. So here what happened, if you see the GST invalidation vendor, HSN, SAC codes, RCM identification, all these are, you need to be close in touch with your vendors. If you are not in touch with your vendors, if they file late, then again the risk is with you. So that is again a big, I can say, loss to the company because you're having problem in getting your cash on time. So in this case, what happened? Vendor compliance must be governed like credit risk. If we don't monitor that, it will have issue because common mismatch causes includes your vendor not filing GST one, uploading incorrect invoice details, or even wrong GSTN or wrong taxable invoice. All this will pop up. So the practice or the practical control of CFO can include what is that is GSTN validation before vendor creation. They have to mention that, and compliance scoring has to be put it in the chart, and then your contract clauses that allow payment to hold for non-uploading of invoices and other things, so that you will get benefited on these things at the future date to avoid the risk. And also the HSN and SAC risk. If a wrong HSN code or wrong rate may not show up immediately, but it can create a demand later with interest and penalty. So the HSN code is very, very important. The most common risk generally areas include is mixed supplies and then composite supply and bundled services or discounts or incentives. All these will have issues at one time. So at the leaders of the finance, I suggest that the master data governance, which will have a HSN or SAC or we can call as a tax codes or even a rate logistics, all this needs to be put it in the ERP to have a control. Now, next one is O2C. It is output risk. There is an order to cash, it is called. It is mainly on account of sales. So here what happened is the major part of the moment you raise invoice, you are collecting or you are responsible to collect the GST from customer. And customer in turn make the payment along with the invoice value and GST. So here the GST rate determination is required. What type of product? Again, here also HSN plays a very good role. And what type of product you are taking and what cycle it is, what type of slab it is, whether it's a 5%, 18%, or 20%, and place of supply, if it is a within the state, interstate, or outside the state, and then e-invoice controls. And then also in some cases we need to, I can say you need to cancel the invoice or modify the invoices in certain stages. You need to give a credit note and you need to monitor the credit notes properly with the serial number and upload in GST portals and export SEZ documentation discipline. Here I'll just reinstate a few line. Export SEZ documentation is very, very important. I think one of the gentlemen is asking about export refunds are not coming. I'll answer that separately. But major part of that comes mainly because of lack of discipline and lack of proper documentation. And I worked almost 20 years in largest export company in Tata's. And we do have to face a lot of issues with customs and other people with the documentation deficiencies and documents discrepancies, which is resulting to delay of huge amounts. And as you know, any refund, whether it's a GST refund, income tax refund, getting from government is not easy unless we have a continuous follow-up and continuous submission of proper and error-free documents. And next, the output is reconciliation with books. See, this is another area where earlier people used to depend on manual reconciliations. Now, with lot of tools supporting on the reconciliations, where we can get accurate and identifiable differences, it will give you a very easy reconciliation, which invoices are not uploaded, which invoices having mismatches, or which invoices is not reconciling with input credit, or shortage of input credit. All those data, you can immediately go back to vendors and then get that rectified. Next, please. The GST close discipline, it is nothing but your rate determination logic, place of supply, e-invoice controls, what we discussed in the earlier. It is same. It is mainly reporting requirements. So once you put your report structure or review structure properly, I think all this can be addressed easily. Next.
Okay, audience, we have a poll for you on your screens. Okay, poll is on your screen. Why are global enterprises more exposed to GST risk? Low vendor count, single GST registration, multiple registrations, and ERP complexity, small transaction volumes. Please put your answers in the poll box, audience. Also, audience, if you have any questions, you can type in chat box, and or else we have dedicated Q&A box that are provided in your options. You can even in between, if you are strike with any questions, you can put in the chat box. We will take up all your questions. Be ready with all your questions, because in most of our webinars, Q&A session is the start time. Most of the people wait for a Q&A session itself. So the sooner you put your questions inside the box, your question will be addressed earlier. Okay, I think someone's raised the hand. You can put in the chat box. If you have any questions, any queries, you can type in chat box, audience. Okay, I think 92% people have answered correct. The answer is multiple registrations and ERP complexity, audience. You have done it well. This gives us confidence that you are listening well in our webinars. So, and I'm ending the poll for now. You don't forget to put your questions in your chat box, audience. Poll is not visible. Audience, you are able to see the poll, right? I can see so many people have answered the question. Prince Gupta, can you check your device once? So for now, I have closed the poll. We have another poll. You can check there. Over to you, sir.
Thank you. The next part is the controls and data and technology. If compliance depends on people, the risk is inevitable because human errors are common, and it depends on system. The risk is manageable. Here, even if it depends on system, how you design your system is more important. What type of inputs you are giving to system, what type of output you are expecting from system, that is very important. If you don't design your technology controls properly, it will give you what is, I mean, people say like it's like dustbin, garbage in, garbage out. So it's very important that you need to have a very closely coordinate with the technology teams, with the functional teams to align, put the thoughts through properly, and then check the outputs thoroughly with the reconciliation parts or compliances part or dashboard parts, and then fix it up for the users so that you will have a more freedom to review the reports than identifying the risk. So here what happened, ERP-driven GST logic engine, and that's workflow approvals exceptions. This is again approval like workflows is nothing but your maker checker part. No manual override audit trials, validations at entry level, master data governance, and evidence repository. So all these things are a combination of activities. Together, we are putting into a box called technology and then expecting technology to provide the data. So when we give all these inputs and other things, it may take a little more time, but we have to ensure that the inputs are properly being given so that we will have a lesser time for reconciliation, lesser time for reviews. Next, please. Yeah, vendor compliance management, as I explained this already in the earlier about the what we call mismatch GST or 2B and dependence on vendor filing accuracy, vendor filing defaults, great cash flow impacts, all those things. So here it's more of a credit risk, as I mentioned earlier. Actually, the CFO can implement certain things. Like here, what we can do is like GST validation before vendor creation, and as I explained, like compliance scoring, all those things they can monitor it. And also another major risk, which is many parts, it's like a silent, is classification and rate determination. These two also very important for vendor compliance management. Next, assurance monitoring and reporting. This is nothing but your RACI person. You have to identify responsible and then accountable and then consultant informed process to be implemented, and then continuous monitoring of dashboards, your ITC risk quantification notice tracker, quarterly internal audit, and annual GST health checkups by the auditors or even a third party, and then your financial closure discipline, financial control framework, enterprise risk. All these will be at a broader way. It is mentioned here, but when you go into the realities, each step is very critical. In every step, in fact, I can say it is like if you don't have a proper audit checks, there is a possibility of getting a notices from the department. There's a possibility that you may need to go for litigations. So biggest risk here is not just receiving notices. The biggest risk is being unprepared with the documentation or inconsistent positions across time or delayed responses. Generally, what happens, they'll give a show cause notice, say 15 days or 30 days. We wait as a human being or as a functional head, we wait till last minute of the day and then start hurrying up with some information or things to reply. Those things will have an impression, they'll have a reputation risk also. And also, if documentation is not strong, this may lead to a lot of disputes and suspicions. Next.
Okay, one more poll, guys, just before we wind up the session. So I have pasted a link in the chat box, audience. You can be able to access the link directly from the poll box, the chat box. Just click on the link in the chat box. You will be directed to the poll that is happening in our LinkedIn page. Put your views on the question, audience. So just click the link in the chat box. You will be directed to the poll that is happening in our LinkedIn page. GST risk reduces because of filing returns on time, governance-driven control tools, avoiding audits, ignoring mismatches. These are your options, audience. So just click the link in the chat box and you will be directed to the poll that is happening in the LinkedIn page. Also, on a light note, if you want to track more of our webinars and the seminars that we conduct, GST talks and the industry trends, everything, we will be posting in our Flowtax page. The recordings that everyone was asking, we will be posting all the recordings links everything in the post Flotex LinkedIn page only. Please make sure to follow our LinkedIn page once you complete the poll. So please make the please follow the Flotex LinkedIn page so that you will be getting continuous updates related to GST trends, industry talks, and all the webinar related concepts. We can I can already see good number of correct responses, audience. Yes, most of the people who answered governance driven controls is the right answer, audience. I'm already giving spoiler for you. So most of the people who answered governance driven controls is the correct answer. So make sure to follow our LinkedIn page, Flotex, so that you will be getting more updates, more polls, more GST content related to the indirect taxes and the GST. We'll be posting in the same page. And the webinar recording also happens in the same page.
Yeah, thank you, Paul. So here the board mandates, what are the board requirements? Things is to approve GST compliance charter and RSCI, mandate GST closure calendar and monthly rectifications, implement vendor compliance governance and payment policy, establish GST control tower dashboard, require quarterly assurance and annual health checkups. Here, I'll just take a minute on the dashboard because which is very important for finance leaders or board and other things. Generally, GST framework, what happens without monitoring, it cannot become a document. So monitoring converts a GST compliance from activity to control system. So to here we mentioning establish GST control tower dashboard. That's why I thought I just explain you here. Unless you monitor a compliance, it cannot become an activity to become a control system. So as a CFO, he has to track a monthly GST track risk dashboard or a few high impact indicators like ITC health or ITC eligibility, 2B reconciliation, ITC claimed or not, and similarly mismatch or value in aging, how it is mismatching, and also in some cases what we experience is third vendor compliance score, percentage of vendor filing on time and high risk vendor exposure. We had that problem because we used to have multiple vendors across the nation. So when we are started doing a manual reconciliation initial stage, we have found that there's a lot of waste of time and missing of information, missing of data. Then we started automating the tools. And then once we get a notice or litigation, member open notices and estimate exposure and aging that you need to identify. They make you notice saying that 30 crores, but you need to find it out. They mention the reason why they given a notice. From that reason, you have to verify your documents, your books, identify the volume, and see whether it's what the quantified value of penalty is right or wrong. And then your GST outflow trend also, you need to check whether cash payments are increasing due to blocked credits or reversals. And then e-invoices, this is also very good control you have to put it. Daily or weekly failure rates and root causes. And another point is like a dashboard of a CFO is mainly you have to move from reactive firefighting to proactive control. Once you change your attitudes from reactive firefighting to proactive control, what happens is reactive is the moment you ask anything, no, it's a taxation department. We know what to do. You people no need to tell. We will handle it. And then when notice comes, that day, night, 24 hours, 48 hours, overnight, people sit and do some activity, prepare some statements, and then submit documents, go to the department, and they will start questioning notice after notice, litigation after litigation, keep increasing it. Instead of that, if we do proactive control by putting all these mandates, what is mentioned in this slide, you will have a peaceful life, you have a data control, you have access to your documentation, because you are reviewing it, you are aware of the situations, what type of things may come, may not come, and you also know what is your exposure of risk. This is very important to maintain these type of checklist. Next, please.
Also, audience, I want to add a point. Also, I want to add a point since the speaker mentioned dashboards. Yeah, Flotex is a GST management platform, which we have recently introduced specific CS4 related dashboards into our platform. These are researched with multiple CFOs, almost 50 to 100 CFOs. We have done research between them. We have interviewed all the CFOs, and we have taken the insights from all the CFO related designations. We have prepared a dashboard which you can which is more relevant of you and which you are expecting to track everything at once. So make sure to check out Flowtax page so that you will get to know what exactly this dashboard works inside the platform. So we'll see you in the demo so that you people who have opted for demo, they will be getting the chance to see the CFO dashboard as well. So if anyone didn't opted for demo, they can have the option to opt for demo at the end of the webinar. You will have a server form. You can put your query over there for the demo. And also you can always mail me at pawan.sahu@websol.com so that we will provide you a free demo. So yeah, sir.
Yeah. So here, if we see this last this word, GSK risk does not reduce because we file on time. It reduces because we design governance, embedded controls, and close exceptions relentlessly. In this point, I'll just mention once again that ownership and governance model, where we can say that you need to identify owner, filing, reconciliation, or notice handling person. That is the RACA matrix, which again will come into picture here. And also you have to suppose a procurement function is there. They should own vendor onboarding or vendor compliance discipline, and finance function should maintain the books properly with the proper reconciliations, and tax owns policies and sign-offs, notices, and IT owns controls or automations, and internal audit also should own on testing and assurance. Audit just should not, our internal audit is nothing but our own internal team, so they should not go and question the people. They should also form part of the strategy of the company to protect the risk of GST exposures. Next, please.
So I think we have came to end of the webinar, audience. Audience, you can start asking your questions in the chat box, or you can use the Q&A box, whichever is convenient. I can see few of the people who has raised hands. If you want to ask any questions to sir, you can raise the hand or you can put it in the chat box. I will enable your mic. Any questions, audience? You can raise your hand with the option, or else you can type in chat box. If you want to directly talk with sir, you can talk also. I will start your mic. The Q&A panel will be open for another 4 minutes. We will close at sharp 4:50. So please type your chat box, or else you can raise a hand so that I will enable your mic, audience.
And someone asked on the export refunds.
Yes, sir. We will go through the chat box as well.
Right, right.
The biggest challenge we face is GST refund for our export business.
Okay.
We are 100% export company.
Okay. So in this case, I have a few questions to the gentleman. One is that export with the LUT or bond, a zero rated payment of IGST, or is it export with payment of IGST?
Sir, I think the question is by Kaushal. Kaushal was not able to enable your mic. You can take both of the.
Okay, fine. See, most common
approaches.
reasons why the GST refund gets stuck is One is mainly shipping bill and GST invoice mismatches. And in some cases, GST-1 and GST-3B mismatches also. And in some cases, what happened, LUT not filed or expired. LUT is like annually, it has to be changed. Every year, it has to be validated. So in a hurry to submit invoices, we'll just use the LIT what is existing. But by the time the 31st March LUT is expired, and if you file it in April, they'll not consider. They'll just put on hold. Unfortunately, they don't come back with any queries and other things unless we keep following it up. And also some cases, invalid bank account or not correct bank account sharing. And in some cases, what happens is that they call us that export general manifest. If it is not filled properly, then that is also will have a problem. And then they will also have another problem of we call one word. It's called as RFD1. So if it's a refund of ITC when it is not giving actually IGST paid exports, if you're not properly chosen the RFD1, then they will again held the refund. Also, refund sometimes is mainly it is withheld or pending for verification, RMS flagged. All these are issues related to the system. These ones you can fix it up with IC Gate, where IGST refund is withheld. So you can check with IC Gate and find out what is the issues are finding. If it is withheld, you need to coordinate with customs or with the GST department.
So we have another question from Seshnath.
Yeah.
How we identify a vendor for zero rated supply?
You have to take a declaration from him. You identify a vendor when you create a vendor master in your ERP or your thing. You need to first identify with him whether his products are eligible for zero rate supply, and that products are you buying it, and then you have to take a declaration. Suppose if the vendor is having multiple products to supply, then yes, it is his responsibility to put proper HSN code to avoid any feature confusion. And if any liability arises because of that, in your contract or in your purchase order, you should mention that the liability should be passed on to the vendor. It is not your cup of tea. You should ensure that, when negotiate with the vendors, you should always be clear on that. Any GST liability arises against the vendor invoices on account of wrong, late submission, late supply, or late uploading of invoices resulting into their penalties and delays, that should be passed on to them.
So Seshnath, I hope you are clear. You can also enable your mic. I have given you permission. You can talk. Yeah, Seshnath. Seshnath, do you have any question? Audience, if anyone have any other questions, we can stay in Q&A for some time. On that note, I want to conclude the today's webinar session. The video recordings, the presentation deck, and all the other materials discussed in the frameworks discussed in the webinar will be sent to you on email, on the post-webinar email just after the webinar. Also, if you want to watch our previous webinars, you can always watch in our YouTube channel with the name of WebSol. So all the GST related webinars will be posted in the YouTube channel and the LinkedIn as well. You can follow our LinkedIn page so that you can get track of our upcoming webinars and upcoming GST related events as well. Thank you, audience. Thank you so much, sir. This is very valuable content that you have provided us.
Thank you very much.